One of the questions that I just had was just basically, I was going to ask this, but then I saw you had a video coming out on it, but I'm still going to ask it is what is one of the biggest mistakes you've made in your journey of whether it's personal finance wise or investing? Because I know you have a video coming out with investing where you've made a big mistake. So now I'm just going to add personal finance plus investing. So what was your biggest mistake that you've made so far in this journey of this thing called life, which you're as old as me. So I knew there was a reason I liked you. So, we're the same age. So that's good. But yeah, in this short time that you've been on this earth.
Yeah, biggest mistakes. I mean, probably yet to come. Mistakes are part of the course. I think I'll make a few more. Probably I don't think I've actually mentioned this on the channel before, but I probably should have bought a house sooner. I think that would be a mistake. And that might just be resulting. Like it might just be, I'm only saying that because the housing market in New Zealand's gone up 30% in the last 3 years or something, and I've missed that run.
Yeah.
But I probably should have bought a house sooner. Outside of that, I really haven't had any massive mistakes with investments. Like you say, I made a video on my worst investment ever just last night that came out as we're recording this, which was with Fiat Chrysler, which has now been renamed to Stellantis after a merger. So I had like a 16% permanent loss on that investment, which as far as investment mistakes go, I don't think that's too crazy, really.
Too bad, but it still hurts nonetheless.
Yeah, it still hurts. And I mean, on the investment side, I've made mistakes much larger than that, but they've been mistakes of omission. They've been things that I understood. The price got to a point where probably I should have bought it, and I just didn't pull the trigger for whatever reason. So Facebook, for example, very, very briefly touched a price where I would buy it in March 2020. It's gone on to do very, very well, and I just didn't buy it. It was only at that price for like a couple of days, if that, and I just basically missed it. And there'll be plenty more of those, but those would be the larger mistakes. And they're ones that don't show up when you go to look at your returns. And again, Buffett talks about this all the time, that he's made plenty of mistakes where he's lost, hundreds of millions, if not billions of dollars for Berkshire Hathaway, but he's made even larger mistakes. Like he's talked about not buying Google, for example, when Geico was spending money with Google to advertise their insurance products. And he could see how good a business it was. He could see that, Geico was spending more and more money with Google, and it wasn't costing Google a thing for Geico to spend more and more money. So, it's all cream on top after a certain point for a business like that. And he saw the massive tailwinds that they had in online advertising, and he just didn't buy it. So I've made a few mistakes, but there'll be more to come, and the mistakes of omission will probably be larger than the ones where I've had losses. So.
Yeah. And so just going back to when you pass up on a company that you're like, because one of the things I know for myself that I tend to, which is why I have to go back and watch videos, is I tend to end up, it's like I miss an opportunity and then I start chasing. It's like, I missed this. So now I'm chasing after what could have been rather than just being like, all right, I missed it and I keep it. So how do you keep your level head, even after you miss an opportunity, not to start chasing after something that is like, this may not end well for me?
Yeah, that's a really good question. I think FOMO is a massive issue at the moment. This is actually something I made a video on a couple of weeks ago as well. And I said, there's a lot of people with fear of missing out right now. And like you say, chasing hot stocks or hot cryptocurrencies or NFTs or whatever at the moment. And I said, let's look at, say, the last 20 years, and we'll try to understand what have been the best performing stocks of the last 2 decades. So, if you had missed these things, you would have missed out on like a 500x return or more in some of these investments, like just crazy home runs. So a lot that you would have missed out on. And I said, let's compare that or let's see how many of these stocks the greatest investor of all time, Warren Buffett, was able to buy. And of the top 10, he actually missed out on, technically he missed out on 8 of them, but I'm tempted to call it 9. He bought Apple, which was one of the 10, but the period of time I was looking between was, I think, 2020, and Buffett didn't buy Apple till 2016. So he got it, but he was 16 years late to the party. And the other one he bought was MasterCard, which is one I'm tempted to leave out because it was a tiny position. Like there's at cost, it's one of his smallest positions in the entire portfolio, but it's done so well that it's kind of gone up the ranks a little bit. Yeah. So, I guess I try to just keep the frame of mind or keep the mindset that you really don't need to catch all the winners to have a really good track record. Like, Buffett again has compounded at 20% a year for 70 years or something at this point. And he's hardly picked every winning stock. So you can have a very good track record without hitting, with only hitting a handful of home runs. And arguably the more important thing about having a really good track record is not having massive drawdowns. So, not chasing these things and then suddenly being down 50 or 60% or something, because, just mathematically, if you're down 50%, you need to go up 100% from that level to get back to just where you started. So I'd say that downside protection is arguably more important than trying to capture upside. And if you can get into situations where downside is very limited, often the upside just kind of takes care of itself. So that's sort of how I think about it. And one other sort of framework I've been using for the last couple of years is this whole concept of the investment punch card, which again is another thing I've kind of stolen from Buffett. He talks about if you're given a punch card with 20 holes in it, and each time you made a new investment, you had to punch out one of those holes. So you only had 20 investments you could make in your lifetime. If that was the case, you would think very long and hard about any new stock that you added to your portfolio. So that's what I've basically tried to do. I've said, if I can find literally one or two investments a year, I'm good. I'm set. That's all I need to do. So it makes it very, very easy for me to just pass on stuff that doesn't meet all of my, investment criteria.
Yeah. That's I told somebody something one time. I was like, just going back to your idea of downside protection, I was like, 1 + 1 - 1 in investing is not equal to 1. Like it's 1 + 1 - 1 is equal to 0.5, because you lose all that you just gained and then some on top of it. And so it's just so important for, like, I always like to say, like, there's a reason why risk management is such a big part of investing. Nobody cares right now, because in high waters, everybody is fine. Like until the tide comes back in, then everybody's like, I'm naked. Nobody nuking me. But like another Buffett stolen quote. I think we're just going to keep quoting back and forth throughout this entire thing. But yeah, so
that's the way to go.
He's a very quotable person. Like he says things in ways that just like grabs your attention, and it's like there's a reason he took that the Carnegie course, because he definitely learned a number of things from that, because he says things very well. But yeah, it's just talking about downside protection to just make sure that we're not doing things to kind of cut our legs off before we can even start running, before we can even start the whole compounding situation to play in our benefit rather than pulling us back.
I hope you enjoyed that little snippet of the Rambling Mind podcast. If you want more of the Rambling Mind podcast, or if you want to listen to the whole episode that you just heard, go check it out on any podcast listening platform, whether that be Anchor, Spotify, Google Podcast, Apple Podcast, Breaker, Stitcher. I could go on, but you guys already know which podcast you love to use to listen to. So go check it out. Link down in the description as well. I'm going to catch y'all later. Peace.